will be talking about construction financing. On our panel, we have today Kelly Clayton. Kelly has more than 30 years of experience in all facets of real estate. She's an expert of real estate financing. She knows products that most mortgage companies do not know these, and she has gone out of her way to help people in acquiring their homes or refinancing on easier terms. And we have Philip Borden, who is an expert of construction. He's been in construction business long enough, and he's been dealing with all aspects of construction financing as a contractor, as a builder, and as a person who built houses for the customers as well. So his customers also face challenges in that. So we are going to talk about today. If you have any questions, please feel free to send those questions, and one of the moderators will take them up to Philip or Kelly. We will keep it as direct as possible. So I welcome you all. And Kelly, why don't you give us a brief on construction financing, and then we will see what experiences Philip had about construction.
Thank you, Dr. Khan. What a pleasure to be here today to introduce all of the programs and products available in the mortgage industry for people to construct their home. We have, today we're going to be talking about investor construction programs, buyers, what construction programs are available for them, realtors and how they can help more people obtain home ownership, and also the different types of properties that we are able to do construction loans on. For instance, modulars, manufactured home, and stick built. So we're going to talk about the type of buyers, the type of homes we finance, and just a few of the interesting aspects that are available in the market today.
Philip, you heard that you have been in construction business long enough, and you came across many situations where sometimes financing was available, sometimes it was difficult. Tell us, what were some of the challenges that you came across?
Well, we, especially now, we are having some complications due to the length of the project time. It's in some cases, it's going beyond 12 months. In addition, credit scores. Credit scores are important. There can be challenges down the amount of capital cash that people need out of the gate tends to start at, about a year ago. I think it jacked up to about 20%. So those are some of the key challenges.
I think I can say with certainty, being in the industry for over 30 years, that construction loans process may be a little bit more complicated than traditional or conventional loans. But a lot of the onus falls upon the mortgage professional. If you have an expert who understands the construction products and understand the construction process, they can keep their customers, whether those are builders, contractors, or home buyers, hassle-free. And for them, it should be a seamless process. Would you agree, Kelly, or do you have a different?
No, Dr. Khan, I think finding the right mortgage professional to work with is extremely important. Looking for a mortgage professional that is able to, one, communicate with all parties, two, take the time to explain the entire process to those parties, and that has integrity and has the buyer's interest at heart.
Excellent. So most of the mortgage companies are focusing on easier loans, like low-hanging fruit. They turn away construction financing, or they either intentionally or due to the lack of experience make the process so difficult for the buyer or for the construction professionals that they shy away from these products. Tell us some products readily available, and give us some tips that how construction people can get that.
Thank you, Dr. Khan. Yes, I would love to do that. There are construction products out there called one-time close for the buyer with as little as 0 down payment. So there are construction perm USDA loans available out there, 0 down payment. And that's with as little as a 620 credit score. And then we have 0 down payment VA loans and 3.5% FHA loan and 5% down on a conventional loan. All of these, the buyer goes to closing one time. So we have the loan products. And the second thing, we have the one-time closing, which means they're not paying closing costs twice. And they're able to know that if their job changes or anything in their life changes, they're still going to be able to have that home and modify from that construction perm right over to that final loan.
I think one thing that confuses the buyers off the bat is all those acronyms and terminology that we throw at them, like USDA, FHA, USDA, all those things, and they get confused from there. So what I understand from this is that USDA, like United States Department of Agriculture, and FHA, Federal Housing Authority, these are all government-backed loans. So they are comparatively easier terms. They're available on easier terms. Is that correct?
That is absolutely correct. It's lower down payment and actually a lower interest rate because they are federal insurance-backed programs.
Okay, so I would like you to tell us who qualifies for these loans, number one, and I'll come to the one-time close part later on after you explain this.
Yes, sir. It is usually for owner-occupied purposes, which broken down simply means someone that's going to live in the house as their residence. It's not an investment property. These special financing programs are for people that are wanting to stop renting and own their own home. And, you know, home buying and home ownership is one of the first steps to wealth. So we want to help everyone that we can get into their own home.
So first-time home buyers or home owners who actually want to live there qualify for government guaranteed loan, whether those are USDA loans or FHA loans. Okay. So USDA loans are not available everywhere, are they?
Right. There are two qualifications to USDA. One, there are geographic locations that are outside of cities. We call them metropolitan statistical areas, but they're outside of the city. And most counties that are outside of the city surrounding major cities are eligible for USDA. The other qualification is income requirements. You can't make too much money to qualify for this. The good news is, in just a few minutes, we can answer those questions as mortgage professionals for people who are wanting to find out if they qualify for those loans.
So while tons of information is available, but this information can be very confusing. I think the easiest thing for a consumer, a buyer, or a contractor is to pick up the phone and call the mortgage professional they trust and who are an expert of construction financing. Philip, have you in your professional life dealt with mortgage professionals, and tell us how was your experience, and did you find any people who specialized in construction loans, or, you know, how did you?
Yes, I've worked with private lenders, essentially loan sharks, from the business standpoint, and also construction loans for the client. A lot of dynamics come in when the client comes to the builder and says, "Here, I have a lender that I'd like to use." A lot of those, that becomes complicated because they have, the majority of the time, the lender is very unorganized, and the process is confusing for both the homeowner and the builder. And so it's important for the builder to team up with a lender that has consistency and simplification.
Yeah, so you're essentially endorsing it. The construction company that we run, we make houses, and we have a very good rent-to-own program where people can rent if for any reason they cannot immediately buy. We do encourage people to get construction loans there. So, from the beginning, they can stop worrying about the financing. And which brings me to the subject of one-time close, and there is more than one-time close. There are products as well. So Kelly, would you tell us what is one-time close and what are other products?
Well, when a buyer applies for a construction loans are simply lines of credit to construct the property, and they're temporary. And so what happens is they have to qualify for the final loan, which is a normal 30-year loan. So it goes through two loan processes. The one-time close means it goes through both processes at one time and goes to closing. Whereas many construction products, you get a construction loan when the house is built, then you got to go back and get a permanent loan. So one-time close means you go through two processes at one time and it's over.
Which means that makes it simpler and cheaper to get the loan?
I believe it does. They're not paying closing costs twice. They're not going through the loan fees twice. So it is a savings for the buyer.
And if for whatever reason, why would a home buyer opt for not a one-time close, like any other product?
Well, there are other products for investors, people that do not want to own or occupy the property. And on those, all of the products require two closings, one to construct and the other to do the takeout loan. The one-time close, they are available for some investors, but most of the one-time close products are available for people who are going to occupy the property.
Okay, so when construction professionals are doing it, or when it's more than one time close, like twice, what is the term for which they can get construction loan, which you are saying is essentially a credit line?
Right. The credit lines are from anywhere from 6 months to some of the higher end houses can take up to 24 months. And as Philip previously indicated, due to lack of materials and supplies and a lack of contractors to do the job, it has been a delay in the construction process for many people. So working with someone that will allow for that delay is also another important feature that people should consider in this current economy.
Philip, as a construction professional, what is your experience? What is a reasonable time duration for which the construction loan should be obtained? Typically, they're available for 6 months, as Kelly said, or 12 months, or even sometimes 24 months. So you don't want to make it for the consumer very expensive as well if they take a longer term loan and they have to pay more on that. So what do you think?
For lower price point housing, up to 12 months is sufficient. Getting into semi-custom and custom homes, a 6-month job before COVID is now pushing to 11 and 12 months and beyond. So getting into 14 to 16 months in some cases, depending on what the specific material types are.
Okay, so in essence, if you're working with a mortgage professional, whether it's a banker or a mortgage broker, and they specialize in construction products, would you feel more comfortable sending your buyers, or you yourself as a builder, going to a mortgage professional, or would you still go to hard money?
Definitely mortgage professional. Hard money is expensive, and can at times tend to get more risky.
Yeah.
There can be a lack of process with the hard money as well.
Yeah. I mean, I feel the only plus hard money is available when you need it. Even though it's very expensive, and the terms are not as stringent as regular lenders put forth for that. Kelly, what are your some tips or points that you want to give to people who want to go for construction financing?
Well, I would like to share today, since we're here, several other programs that are available out there besides the first-time homebuyer zero down construction one-time close. All of our programs are for modular, manufactured, and stick-built. Those products have been available in our industry for a long time, but as you said, Dr. Khan, a lot of people do not want to do them because they are a little bit complex. The other thing is that the investor programs out there are from 1 unit to unlimited, multi-unit condos, or up to, anything, 10, 20 condos. So the products are available. They are in multi-states, and there's no reason why people cannot continue to build homes and obtain whatever financing they need. It's out there in the mortgage market today.
Okay, so any questions, any comments, anyone monitoring the chat? Do you get any questions there?
Yeah, I think, Kelly, in one of the sessions previously, we had talked about some of the very specific programs where even with people with zero down can obtain a construction loan, right? Or 3.5% FHA type of a loan. How is that possible? Can you give some details of that?
As Dr. Khan had stated, these are government-backed loans that have been around since the 50s. It's just that a lot of mortgage companies do not want to offer those products because of the complexity and the time that it takes to process them. But working with a mortgage professional that cares about the community and wants to help the consumer, then that's someone that they will need to seek out in our industry.
I think I absolutely agree with you. We work in a USDA approved area, and we work in mostly rural, where people have little or no information about these products and loans. And when we go out and of our way to help them, we keep them free of all the complexities or complications of the loan process, so that they can focus on building their homes or designs or whatever they want to do there, and they deal with construction professional. And with due apologies, Philip, construction people are not very easy to deal with. They tend to get very, so it's a very, very confusing and stressful process if you don't have the professionals on your side. So I would encourage you to, all the people, construction, whether you are in construction professional, whether you're a builder or a home buyer, to do your due diligence, ask around, find the expert on the product that you're looking for. Don't settle for anything less. There may be, many mortgage companies, especially in cities, they want to just go for easy loans, and they discourage people who are looking for government-backed loans or construction loans or those kind of loans. So please look for a competent specialist mortgage professional in your area for that. So any other questions, any comments?
Yeah, I have a question to Philip. Philip, as a construction professional, what are the kind of unique challenges that you as a business think that a good, competent finance professional, a mortgage professional can help you with and help you shield from, a lot of the issues with the client?
So I can tell you some key challenges that have happened over the last year, and I think it's still going to be around for a little while. That it's a issue that I've been trying to get resolved, is how to properly manage and deal and mitigate the risk in escalation with the pricing and escalation? How do you work proper? How do you properly structure the loan deal when you have such a high fluctuation in material costs? And 1 month lumber's, it could fluctuate, the whole job could fluctuate 10% or more from when you originally price it to when you break ground and through the process. So you're looking at 10, 15, in some cases 20% difference of shifted cost. And I think that's an important issue to have a plan of action on.
Dr. Khan, may I answer that question?
Yes, please.
Okay, I would say that it's imperative in this current economic situation to have a contingency reserve. Contingency reserves in the past have been 10% due to this type of problem. Everything sort of worked itself out, but we're back into another time and this day and time that we need to implement maybe a 10, 15% or 20% contingency reserve needs to be built into the loan with your mortgage company. And if it's not used, it's credited back. So it's never money lost, but it's money that was communicated with the builder, the mortgage company, and the borrower all in the beginning. So let's just summarize it into one word: contingency.
And that's what I tried to accomplish with some lenders that I've worked with, and it was really kind of a foreign language to them. They didn't really know how to properly execute that idea.
That's why it's very, very important to work with a product specialist, the person who knows about the construction loans very well. It will make construction professionals, builders, as well as home buyers' life much easier. And as always, I would like to remind all of our home buyers as well as professionals that we do these series of programs in an effort to educate our benefactors and make the home buying process easier, getting the money for home financing, which a lot of it is available through the government programs, as well as lenders encourage home buying, because this is one of the safest way for lenders to lend money. So they love to do it as long as you have the most competent people, specialists, product specialists on your side. You should not have to worry or go through any complexities. If you have any questions or if you need any help, we are here to help you all the time. Kelly is an experienced professional, and she's always out to help the community in any which way she can. It does not matter who you are getting your services from. If you're working with another mortgage company or a construction company, it doesn't matter. We will still love to help you and make your home buying process easier. With that, I would like to thank Philip, Kelly, and all of our participants who participated in this. So you have a great day.
Thank you so much, Dr. Khan.
Thank you.
Thank you.
Thank you.